Hi guys, it's Brian Palmer here today with Chris Leap from Leap Wealth Management. And Chris, wanted to kind of get things started. You're a financial advisor in the Dallas, Texas market, and just wanted to ask you a few questions about your business so folks could get to know you. So first, can you tell me a little bit about yourself and how you got started in the financial industry?
Sure. Yeah, so I grew up in Oklahoma and graduated from Oklahoma University, actually played tennis there for 4 years, and once I graduated from school, I didn't have the clarity like most people that knew what they wanted to do as soon as they graduated from school. So I extended my tennis career, if you will, and spent some time up in East Hampton, New York, and down in Palm Beach, Florida, teaching tennis, and then finally realized what I wanted to do for a living and for a career. And I joined a company called IDS, Investors Diversified Services, about 20 years ago. IDS later became American Express Financial Advisors and then Ameriprise. And then finally, in year 2010, I spun off and started my own company, Leap Wealth Management.
That's excellent. When someone is thinking about financial advisor, or investing, what should they look for? What are the qualities they should look for when they're thinking about talking to somebody about their finances?
Well, I think it's important that if someone is looking to hire a financial advisor, that number one, you want to find someone that you enjoy working with. So your personality should line up. But number two is I think it's important that that financial advisor also be trained and be properly certified. There's a lot of designations that are around in the marketplace today, but I think probably the gold standard would be the CFP designation, which is also the Certified Financial Planner. I think that's a very important designation to have. It means that this person has been properly educated and has passed all the examinations to certify that they know their information. I think it would also be important to work with somebody that has some experience in the field and experience being a financial advisor. I mean, just like any professional that you work with, you wouldn't want to be your doctor's first patient. You probably also wouldn't want to be your advisor's first client. So I would definitely be looking for an advisor that has some experience in the industry. And then lastly, probably one of the more important things is that you want to find a financial advisor that is a fiduciary for you, the client. What does fiduciary mean? That means that they are obligated and legally obligated to work in your best interest. Unfortunately, most of the financial advisors that are in the industry today are not a fiduciary for the client. They're in fact a fiduciary to their firm, and I think there's a conflict of interest there.
Very good, very good. When you look at financial planning, what types of services does Leap Wealth Management offer?
Well, we offer full comprehensive financial planning services, which means that we'll help look at someone's, first of all, we'll try to understand what somebody's trying to accomplish, whether they're trying to prepare for their retirement or provide a college education for their children, want to make sure that they're adequately protected, want to make sure that they're reducing their taxes as much as possible, or make sure that their estate's in order. So we definitely provide the full range of financial planning services, and I think this is another cautionary thing that you need to be aware of, is that everybody in this industry today is a, quote, financial advisor or financial planner. That's kind of the buzzword in this industry. So you want to find somebody that definitely provides a comprehensive approach to financial planning, and that they're not just selling product like stocks or bonds like a stockbroker might, or just insurance like an insurance person would, or maybe just an annuity salesperson. But it's a little confusing in this market because everybody is, quote, a financial advisor.
So what makes you and the team there at Leap Wealth Management, what makes you guys different? What kind of separates you from those other guys out there?
Well, I think there are other firms that do financial planning like we do. But we're different in that, again, when we say we're financial planners, that truly is what we offer our clients, is the breadth of financial planning, and that we can help clients in all the areas that I just discussed. So we go deep in all 6 areas of what the College of Financial Planning deems as financial planning areas. Retirement planning, looking at cash flow, net worth, protection planning, tax planning, retirement planning, estate planning. We go deep in all those areas. But I think what makes us different maybe is that we really try to align our services with what our client or prospect is looking to accomplish. What I mean by that is certain people that come to see us have certain priorities that they want to make sure they're working on. And as they go through life, those priorities will change. But we try to align our services and help them in the areas that are a priority to them. But we'll also look at their overall situation and maybe try to make them aware of certain areas that they haven't done well in, or certain areas that they may be able to improve their situation in.
Excellent. But when it comes to investments, someone who's looking to grow a portfolio, for retirement or for other purposes, what type of investment philosophy do you guys use? What is there anything unique about how you guys approach investing itself?
Well, actually, yes. I think this is probably where we differ the most from most of the other financial planners or advisors out there, is our investment philosophy. We subscribe to a philosophy that we call advance and protect. And what that means is that we don't just build a portfolio for clients and hope it turns out well. We actually build a portfolio, but then we monitor this portfolio on an ongoing basis. And we try to advance our clients' portfolios when markets are strong and the price of the investments that we are using, when the price of those investments are going up, that is where we will really try to advance and make money for our clients. But we know that the markets don't always go up. Markets have periods where they show strength, and markets have periods where they show weakness. During the periods where markets show weakness and that prices are beginning to fail a little bit or start to go down, is where we kick in our protection mode, if you will, and that's where we try to lock in the profits that we made from our advance mode, sell the investments that are now beginning to weaken or decline in price, and protect the profits that we made during the advance period. So advance and protect is kind of our motto, and we don't just hope things turn out in the market. We monitor it closely and move in and move out of the market as necessary.
Okay. Well, it sounds like from a portfolio standpoint, that's probably a fairly strong way to address risk, I would imagine. And so kind of what a lot of investors are concerned with is not just what to put their money in, but how to protect the money that they have. So do you guys systematically do that, or how do you protect risk in your portfolios?
Well, our number one objective is to control risk and protect on the downside. Okay, I've been around when the tech bubble burst back in 2000, and I was around in 2008 when the market got clobbered again. And this system that we use is number one, designed to protect on the downside. If prices are going down and there's weakness in the market, that is a time where we will not be participating in those investments or in those markets. But when prices are strengthening and prices are going up, that is when we participate and we try to make money. So we know that if we can protect and keep powder dry, meaning have more cash available without giving up all of our profits in a down market, we're going to have a lot more money to invest once the market does strengthen again, and have the ability to put more money to work in the markets for future appreciation and accumulation. So yeah, I would think that that is the number one area that we really differentiate from most advisors, is our risk management that we incorporate into our strategies. Most financial advisors, right or wrong, and this is where you have to align yourself with the philosophy that you believe in, most financial advisors will build a portfolio and then hold that portfolio and then once in a while rebalance that portfolio, more of a kind of more of a long-term buy and hold approach, which I'm one of those that believe that we are not out of trouble in this economy yet. I think there's going to be continued problems, and there's going to be continued situations where markets will have tremendous downside risk, and we want to be sitting across from the client saying, hey, we actually took action, we protected your accounts, you can sleep well at night, and we're going to be well positioned once this market is ready to appreciate again and strengthen.
Excellent. What type of tools do you use for your when it comes to developing a financial plan? What types of tools do you use?
Well, we feel like we use the best tools that are available in the marketplace today. We have we use an aggregation tool, which is really nice, that people can pull in all of their outside accounts into one piece of software, see everything all in one place. It's also a place where clients can log in and see their retirement plan that we've created, the education plans that we created, see all their insurance policies all in one place, see all of their financial documents all in one place, including their wills, their trusts, all those different documents. It's almost like this software is your complete financial picture all in one and organized, which is a really neat tool. Okay, so that's one of the pieces of software that we use. But the other piece of software we use is the software that helps us make the buy and sell decisions for our investments. This is also the software where we build portfolios for our clients and incorporate the technical analysis into that software to help us with those buy and sell decisions. And one other quick comment I'd like to make on that is we have the ability to not only manage clients' accounts that are personal accounts for you, but we have the ability to also use this software to help clients manage 401k accounts or tax-sheltered annuity accounts, things that most advisors have to stay away from because their compliance departments won't let them advise specifically on those assets. We have the ability to use our software to specifically advise clients on sometimes the largest accounts that clients might have.
Excellent. When someone comes to you, just in kind of a general ballpark, I'm sure there's not one specific answer, but how long does it typically take to kind of analyze their situation and kind of come up with a plan of attack for them?
Well, it really depends upon the complexity. I mean, some clients have money and accounts everywhere and very complex financial situations, so the data gathering process might be a little bit more complex there. Other clients' situations are much more organized and easy, so it really depends upon the complexity, but the process is really to bring in your statements, help complete a short data gathering book so we know where the assets are, we can understand the financial situation, and then we will typically have about 90 to 95% of the information that we will need to build a financial plan and propose our solutions. There's always going to be some follow-up and detailed questions or answers that we might need, but typically the process it can be completed in a matter of a couple of weeks.
Okay. But when it comes to, you hear terms out there. You hear financial planner, financial advisor. You also hear wealth management. And when it comes to wealth management, kind of what should someone really think about? What's kind of the first thing that they should consider when it comes to how they manage their wealth?
Well, I feel pretty strongly a certain way that that markets can be difficult, and maneuvering in difficult markets can either make a client extremely wealthy or can destroy a client pretty quickly. So I'm one that believes that we shouldn't just sit back and hope that the market takes our accounts in a certain direction and make us money. I'm a believer that there's going to be times to invest in the markets, and there's going to be times of strength in the market, and those are the times where you really want to be more aggressive and really try to build your wealth. But by the same token, our economy, not only here domestically but worldwide, economies face difficult times. And it's not like it was 15 or 20 years ago where we just cared about the U.S. economy. We now care about the global economy. And we just saw, 6 months or a year ago that, little countries like Greece or Italy or Portugal, what's going on in their economies can drastically affect what's happening in our stock markets today. So we really keep our finger on the pulse of the markets and of our investments to navigate when we should be in the markets and when we should be out of the markets. And I think ultimately, by monitoring it very closely that way, we can accumulate wealth much more efficiently. And once we accumulate that wealth, we can protect it once we've accomplished that goal. So again, I think it comes down to philosophy in terms of how people want to manage their money. But I think I've seen a lot of people make a lot of money and then give it all back through some periods of rough stock markets. So I think the number one priority, if you were to ask me, is if you're going to try to accumulate real wealth, you need to have a system that you can follow to help you navigate on an ongoing basis to make it when it's time to make it, but protect it when it's time to protect it.
Very good, very good. Kind of once someone sits down with you and starts working with your firm, what's kind of your ongoing communication plan? How do you communicate with clients on an ongoing basis and keep them abreast of kind of what's going on?
Well, we always have an open dialogue with our clients, and they can call us or email us at any time, and we're very good at getting back with them in a very timely fashion. But we take it upon ourselves to be proactive in terms of our ongoing client relationships. We typically ask clients on how often they would like to meet, if they would like to meet on a regular quarterly basis or semi-annual basis or annual basis. Typically, most clients like to come in and sit down with us for a formal review on a 6-month basis. Some people with a little more complicated situation like to come in more often, and some with a less complicated situation like to come in a little less often. But we take it upon ourselves to reach out to those clients on an ongoing basis to schedule and sit down for a formal review.
Very good. Well, Chris, thanks for your time today. And again, this is Brian Palmer with Infusion, and this is Chris Leap with Leap Wealth Management. And I want to thank Chris for his time today, and we'll be in touch with everyone soon.
Thanks, Brian.
Thank you, Chris.